again. My name is Robin Walker. I'm the Director of Graduate Financial Aid and Compliance at Wilkes University. Tonight we'll be doing a presentation on what to do with your loans after graduation. I'm going to turn it over to Kat Del Grosso from College Ave, and she'll finish introducing herself, and we'll get started. Thanks, everyone.
Okay, thanks, Robin. Hi, everybody. I'm Kat. I am basically I am here tonight to talk to you about loans related. They could be. This is all related to either federal loans or private loans, so it doesn't matter. There's something in here for all of you. So if you've borrowed, you're in the right place. You do not have to be a College Ave borrower to be on this call. This is a general overview for you. And it is really just something, it's additional information for you to have. But also it also gives you a chance to ask questions in real time with me, with a human. And so if you have any questions, please put them in the chat, and Robin will monitor that for me. And then I will touch base, Robin, with you periodically to see if you have any questions. And, feel free to put your questions in there for me. So hopefully this will help for you tonight as you're getting ready to graduate, or if you happen to have already graduated in December and you've joined, because I know those folks were invited as well. Welcome. And without further ado, okay. So congrats that you've graduated, and since you're on the call, you've borrowed at least one loan or more. So tonight I'm basically going to go over some rights and responsibilities that you have as a borrower. I'm going to tell you what defaulting means, and we definitely want to I definitely want to guide you away from defaulting on your loan. So that's a bad word. So we want to get you away from that and prevent that sort of thing from happening to yourself as you're moving into your career after leaving Wilkes. I'm going to talk to you a little bit about some tips on tracking your loans and doing some things that will help you stay much more organized as you're kind of approaching repayment. And I'll give you some other repayment strategies and some info in general about contacting your lender and things like that. So in terms of rights and responsibilities, so it's sort of officially, this is sort of important that this is part of your exit sort of counseling as you're leaving school, that you're aware of some of these things. So obviously loans are items that or things that you borrowed that you need to repay with interest. They are, it's just like having a car loan or a mortgage or something where the interest is accruing. And so certainly the faster you can pay them off, the better off you are. But the good news is you will have options in terms of repayment plans that are obviously reasonable timeframes for you to be able to work on your student loans. So I'll talk about the different repayment plans tonight. Additionally, the assumption is that you've read and understood what you've signed on to through your promissory notes over the years, through either the federal and or private loan programs. And quite frankly, I realize that as consumers, there's always a lot pushed out there at us to read. And sometimes, I'm just like you, there's too much to read. And so it's hard to keep track of everything, but that's okay. If you don't remember what you've signed for, now's the time for you to get organized and kind of know where to go to find everything that you're responsible for. So contacting your lender, whoever the lender is for each of your programs, and again, I'm going to give you some guidance on that. How do you figure that out? Contacting your lender or whoever's servicing your loan. You can get a copy of your promissory note. My recommendation is to kind of start getting organized right now. I'm probably going to say that 10 times tonight because getting organized is sort of key, because then when you are starting repayment, then you already kind of have everything in one place in an electronic file or folder on your laptop, or however you want to get organized. If you like paper, fine, you can do it that way. But certainly, I'm sure most of you on the call are probably doing this in an electronic way. So getting organized is key. Even if you don't happen to get a bill, you're required to make payments. So you, like, if for some reason you move and you miss something in the mail, it's still rolling behind the scenes. So it's important that you are, staying on top of what is due, when it's due. And even if you didn't get the email reminding you to make the payment, or didn't get the paper mail, if you happen to be getting paper notices, you're still responsible for it. So it will be important for you to kind of, honestly, I would set up automatic payments for your loans, because that's the best way to make sure that you're always on time, provided you have the money in your account, of course. But that's the best way to pay, is to do it through like auto debit out of your checking or savings account. And that way you'll always be on time. And quite frankly, sometimes you end up getting better deals on interest rates when you do pay through auto debit. So you might even save money in the end. Okay, the next item is just sort of staying in touch with your student loan servicer. So whoever it is, whether it's on the federal side or private loan side, just staying in touch with them to make sure that they know, where you are. Did you move? Did you change your name? Are you having trouble making payments? That's a big one. Like, if you're having trouble making payments, you definitely want to be in contact with your loan servicer. So that's all that is important. Even if you can't find a job in the field that you're looking for immediately, they're still expecting payments from you. So there's not like they're gonna forgive something or cancel it just because you can't find a job in your field. So if you are having trouble, like I said, making payments, you should contact the loan servicer to ask for help. And then make sure you're opening and reading all your mail. So here's the thing again, about all of us, as consumers, we're just getting bombarded with, spam calls and texts and paper mail and everything. And it's very difficult to slice through it and figure out, okay, what is important here and what is junk. But suffice it to say, just be careful of, make sure you're looking at the who is sending you something. And then if you're doubting whether you should be clicking on links, you can always call.
Of course, anytime.
Here, I'll mute that person. Robin, you can go ahead and mute anybody if you hear any noise like that. So make sure that you're kind of cautious if you don't really recognize who's sending you the emails, the texts, the paper mail, before you start clicking on links and doing that sort of thing. The best thing to do is, if you're doubtful, is to contact them directly by way of like a phone call or their official website, as opposed to clicking on links that you're getting in your text. But one of your responsibilities is that you're supposed to read all this stuff. I will sympathize with you that there is a lot of junk that we get. So okay, so what is federal loan default? So basically it means that you have not made a payment, or you haven't made a payment in 270 days. So it's essentially 9 months of time where you haven't made any arrangements. If you're having trouble, you've got nothing scheduled, you haven't made a payment. So you don't want to be in that situation. And if you think about it, 9 months is a pretty long time. So if you're having trouble, you knew that well before the 270th day. So my advice to you is, okay, I still don't have a job yet, or I had a job, but I lost a job, and now I'm in between things. It's okay. We're all human. These things do happen to us as humans. So you should just contact the loan servicer, make sure that they're aware of what's happening, and then they will work with you. So technically, if your payment is 1 day late, you're delinquent, and they can charge you a late fee at that point. Most likely they will charge you a late fee if you're late. They might have a grace period, so they might give you some time to, maybe a couple weeks, and then they charge you a late fee, but it just depends on who the lender is, who the loan servicer is. They will report it to the credit bureaus. The 3 credit bureaus are Experian, Equifax, and TransUnion. They will report it to the credit bureaus after about 3 months, so 90 days late. So it will start to like, you don't want that to happen, because then, as your credit score goes down, you have a harder time getting the best deals for interest rates for, like, if you were to buy a car or a house, or if you were looking for a credit card or things like that. So you don't want to get to that point. So my advice is, anytime between the one day you miss it, or if you're going to miss it, make the phone call, or a lot of the lenders have online chat or text messaging now. I don't know about for federal loans, but for sure they at least, you can call them, you can email them, and somehow you're able to reach them. So do it as soon as you can. If you happen to have a Perkins loan, a federal Perkins loan, which that program is no longer making new loans, but if you happen to have an older federal Perkins loan program, and you're on this call or listening to this recording, just know that so the loan, there is a loan servicer for that as well, and they may declare you to be in default if you're not making your payments either by the due date. So any kind of federal or private loan, educational loan, there's always consequences of not paying. And so this is sort of a guide. In terms of what happens if you were to go into the federal loan default, which is again at the 270th day or after that, it will damage your credit score. So your credit score is what is created from, that's a whole separate presentation about credit, but your credit score is important as you are building, after you graduate and you're building your credit over time, and you want to be able to obtain some of these things I mentioned, like a car or a house or other credit cards. Quite honestly, sometimes like even landlords, they're looking at your credit to see if you're a good risk in terms of a tenant. That's very common these days. So you want your credit score to be as high as possible. And the credit score range is between 300 and 850 points. So like I said, those three credit bureaus all sort of manage the credit score world for us. And they're just three competing companies essentially, who all have our data in credit reporting, and they each have a score for us, and they're probably pretty similar, but they range from between 300 and 850. So you don't want anything bad to happen, as though the consequences will be, it'll make it harder for you later to buy things. Okay, so the other thing is that your credit report is kind of hanging out there forever. So some things, some of the bad things come off after a certain number of years, and then you have a lot of good stuff that stays on there. Actually, the good stuff stays on there forever. And when I say forever, I mean like this is a lifetime thing. So I have been in the working world for, okay, I'll just say it, 30 plus years. Like my credit report is rather thick compared to you guys who are coming right out of college, and you maybe don't have as lengthy of a credit history. But just suffice it to say, like, this thing sort of tracks us over time. So you want to protect yourself. Loan acceleration can be requested if you have any kind of issues with, if you go into default, they could accelerate which doesn't really make intuitive sense because you're already having trouble, but they're accelerating what you owe. And so it's not a place you want to end up in, because then it's just going to be even harder for you to have to pay it at that point. And then wage garnishment is also something that happens with federal loan default. So this means that they can take up to 15% of your pay and withhold it, and they'll pay the loan holder or the lender essentially to help get rid of that defaulted loan out there, unfortunately. So it just starts to snowball, quite honestly, to say it. That's the best way to say it, I guess. You could no longer get a deferment or a forbearance on the loan at that point. So you're kind of stuck. You're kind of like you're down the road kind of far. So you don't want to get there. Do something prior to the 9 months. It'll be hard to buy any kind of real estate. You'll definitely be turned over to a collection agency, most likely. I shouldn't say definitely, but like most likely you'll be turned over to a collection agency. There are some lenders that don't do that at that stage. They'll continue to try to collect it on their own, as opposed to having a third party collection agency call you, but it just starts to get a little ugly at this point. If you have any tax refunds, those can be withheld, and technically you can be taken to court. So that's a bummer. So make sure that you are not moving in this direction at all. So that's the federal loan stuff. And quite frankly, the private loan side is pretty similar. So if you happen to have any private loans that you've borrowed while you've been at Wilkes, or maybe if you were a transfer student at one time and you borrowed somewhere else as well, it's all the stuff combined. Or if you went to graduate school at Wilkes, but you went to undergraduate somewhere else, who knows? But basically, you folks know where you've been, and now you just kind of need to know, okay, what do I have? I have federal loans, I have private loans. Maybe you just have federal. So this is your moment where you kind of start keeping track. The private loan side is fairly similar in terms of the consequences. The timing, though, is a little different. So you can see here that the 30 days late is more likely to be when your loans start to get reported to the credit bureaus, as opposed to the federal side, which is at 90 days. You might start going into collections between 30 and 120 days, depends on the lender. And then after 120 plus days, you are charged off by the lender, and that is the point where they typically will have a third party to try to collect on your balance. So again, it's not a place that you want to get to, and you definitely want to contact the private loan lender if you have any trouble. And then the consequences of default are really just about the same as federal, except that wage garnishment, you can see here the percentage of wage garnishment could be a little bit higher. It depends on the lender in terms of what the wage garnishment percentage could be if you were to go into default. So, but honestly, a lot of these things are really, it's the same story as the federal loan slide. You just really want to not get to that point. So that's why we're here tonight, because you're not going to get to that point. I have faith in all of you here. It's best to just, I think sometimes people feel like embarrassed. I've worked with students for my whole career, the 30 plus years in some capacity. I work at College Ave now, but I used to work on a campus, a couple of campuses, and I know I've spoken to students like you for years. And sometimes, I think and I've also spoken to people who have graduated and then they're in a situation, if you will, with their loans and they're having trouble repaying. It can be embarrassing to say, like, I'm having trouble, but you know what? It's okay. You just make the call, and you'll be on a better track, and you'll thank yourself for it later on. So that's my advice to you, as this old gal here on the phone who's been out here a little while. So it's important to kind of track get organized, as I've said before, and track who is it that you owe. So like I said, you're on this call tonight. It doesn't necessarily, you don't have to have a College Ave loan. That is where I work. But if you do, I put that on the left side. Like, this is where you'll this is the information you would need in terms of, we service our own loans essentially. Well, we have a third party that helps us, but they're basically, everything's with College Ave, so they're College Ave people. On the right hand side here, if you borrow through someone else, let's say through one of the other lenders that are that any number of lenders that you could have borrowed through, you may have borrowed through a couple of them over time. Just make sure who they are. And you know what? The best place to figure that out is, because if you forget who it is you've borrowed through, the best place to go is to your credit report. So I actually do have a slide in here, but I'll say it now. The best place, so the only place you should really go to get your credit report for free, which you can do weekly for free, is at annualcreditreport.com, which is a federal website, and it is in this presentation, so it'll be here. Annualcreditreport.com, and that is the legit site for you to go and get a hold of your credit reports from all three of those bureaus. Experian, Equifax, and TransUnion. So if you want to go, you know, you can go grab it. The nice thing is you can go into that website and grab all three of them in one sitting. So you kind of like do the first one, and then it will guide you to the second one, and then it'll guide you to the third one. And I actually recently did this, and it is quite easy. So it's something you should do as you're starting out, is to become familiar with that website. So that's where you can find out who you borrowed through, at least, you know, for sure. You'll see any of your loans, or if you happen to have a credit card or anything like that, it'll be there. And that is the beginning of your credit report, basically, if you're just sort of starting out. If you're a graduate student and you've been around a while, you'll see more stuff on there that maybe someone who's just come out of undergraduate level. But suffice it to say, if you are a domestic student or a U.S. citizen or a permanent resident, you do have a credit. You do have a credit report through all three of those bureaus, and I would recommend just putting that on your list in the short term and go out there and pull them in. You can just download them as PDFs. Okay, and then in the center here is the federal student loan information. So basically, I'm just gonna run out there to that site next here. So studentaid.gov is the legitimate place for you to go when you're trying to figure out, okay, who do I owe for my federal loans? Again, your credit report will have it on there. But you can also go to, this is where you filed your free application for federal student aid. You can go in here and you can look under loan repayment, and then you can click on who's my loan servicer, and that will guide you to figuring out who it is that you owe. And you can see the various loan servicers for federal loans here in the listing, and they have their contact information here, and a lot of, you know, advice as it relates to figuring out who you owe on the federal side, if you do. And, you know, most likely you do. If you took out any of those federal direct loans, you do. So that's the kind of the three different areas here. Well, really the left and the right are private loans. The middle is federal. Okay, I would also, I do see a question in the chat. Okay, Credit Karma. Yeah, so you can also look at Credit Karma, but so here's the thing. So Credit Karma is another company that they're not a credit bureau. So the three credit bureaus are the three that I mentioned: Experian, Equifax, and TransUnion. Credit Karma offers a lot of different services related to kind of helping you with your credit, but they're not one of the three bureaus. So yes, you can use them to get some advice and to help guide you through sort of starting out, but it's they're not one of the actual three credit bureaus that you would be pulling in. So the annualcreditreport.com, I would start there, pull in the three credit reports. And then for Credit Karma, it's kind of like it's in its own little silo over here. It's not one of those three, but it will help you with some of your credit advice that you need over time. And I have not used it myself, but I know a lot of students or graduating students do use it and ask questions about it when I'm on these calls. Robin, did you have a question?
Yeah,
or a comment?
well, like for Credit Karma, it helps you increase your credit rating. Sometimes they'll give you advice on what to do to help increase your credit. So if your credit score is 500 and you'd want it to be 625, and they'll help you with some things that you could possibly add to help with that. Okay, so that's the difference. The ones that Kat's talking about right now is actually the free credit reports that kind of, it shows you where your funds are at. Okay.
Thank you. Okay, so here's a sample. So my advice here for this slide is really for you to do something to get organized. It doesn't have to look like this per se, but this is just a concept of, you know, maybe you use Excel, or maybe you use one of the you know, you can Google, you know, like loan trackers and see what you can find. But like, this is just a simple template. This is no big deal here. I have a source at the bottom, but I mean, this is just a, you know, something simple you can use. But quite honestly, I just for me, I would used to use Excel and be organized with it that way. Some people like to use an app for things and that. So you can look at lots of different things to track your loans. But my advice to you is to find something you like and use and get organized before you start having to repay your loans to understand, okay, who do I owe? How much do I owe? What is my interest rate? When is my end date of this loan? And how much am I going to be paying every month? And that way you can kind of do that to add up everything. Because especially if you've taken out private loans and federal loans and multiples of them, like if you've been in school for a number of years and you've taken something every year, you know, that you just want to be able to kind of visualize what it is you've got in front of you. And so I recommend using some sort of a calculator or a tracker to help you do that. So I do have a couple of, you know, tracking and budgeting tools on this slide. So that's in like the last bullet there, the last number. So I've got some budgeting recommendations that you can use, Rocket Money, YNAB, Every Dollar. Sometimes your bank might have their own type of tool that you can use. Good Budget, NerdWallet, and Credit Karma probably has one too. So I would look at that and see. But again, you know, some of these are free and some of them aren't. So it depends on if you want to spend money on these kinds of things, or if you just are looking for the free options, because some of these are free options. And so, you know, free is for me. I like free. But, you know, you can do certainly whatever you like based on the style and how robust it is underneath. But anyway, I would get organized, get all your loan stuff together. Most likely you're going to do this in an automated way, you know, an electronic way and something on your laptop or whatever. Really, I've said a lot of these things before already. The one thing I will point out is number 5, which is to make sure that you tell the lender when you're moving and if your name changes, because like I said earlier, you're still responsible, even though they might not know where you are. And you might have mail forwarding, and that's a good thing, but usually the mail forwarding ends after, well, sometimes I think isn't it 6 months, I think, or something like that, with the US Postal Service. So I'm like, you don't want to just be stuck in all that. So just make sure they know. And a lot of times you can do this through like online chat or something easy. So it shouldn't be too difficult to do it. But again, if you've taken out a lot of different loans and you've got a listing on your tracker of like, you know, 8 different loans, it does take a teensy bit of effort to have to let them know when you move and stuff. But unfortunately, it's kind of one of the things that we, you know, adulting can be kind of hard sometimes. Yeah, you have a list of things you got to take care of, and that'll just help you down the line. Okay, so this is the slide that has the picture of the each of the bureaus, the national credit bureaus. So these are the 3 that are, you know, creating the credit reports that, quite frankly, a Credit Karma is going to look, you know, be helping you use. But these are the 3. So annualcreditreport.com is where you can get those freebies of this, and that website is listed here at the bottom. Again, you can get them weekly, up to weekly. I think that might be a little over, you know, a little overkill. You don't really need to pull them weekly, but maybe you kind of set your calendar to do them every 6 months or every year or something, because sometimes there are errors on there, and sometimes there's a lot of fraudulent activity. So if someone has stolen your credit to open up something and you didn't know about it, the best way to know about it is to be watching this type of stuff, because it's going to hit your credit report if it's tied to your social security number. So, you know, I think I probably said, you know, this, I'm repeating myself a little bit, but it is important to kind of pull these periodically. Okay, so for repayment, there's something called a grace period. So after you graduate, if you've taken out like a federal loan, you will, as an undergraduate student, you would have like a 6-month grace period before you have to technically start paying back principal and interest. The interest on an unsubsidized loan, if you had any unsubsidized direct loans, that's the name of it. The interest would have been accruing while you were in school. And so maybe you've been paying the interest while you've been in school, but maybe you haven't. A lot of students, quite honestly, you know, they just kind of wait till start paying it after they graduate. So whatever the case is, just know that the principal and interest on that loan is starting after 6 months for the federal direct loans for undergraduate students, 9 months for graduate level students. And that's the time for you to get organized. So I've definitely said that. So on the private loans, if you have any private loans, the grace period will vary, but typically they are also between 6 and 9 months, depending upon whether they're undergraduate or graduate programs. So you can always ask your loan servicer to confirm, or you can go back to the promissory notes that you've signed and it'll tell you there. Also, the interest is accruing during the grace period on private loans and direct unsubsidized loans. If you had any subsidized loans while you were in school, federal subsidized loans, they have not been accruing interest while you've been there at school, and nor will they accrue any interest during the grace period. But the unsubsidized loans do and have been while you've been there at school. So I just wanted to make a distinction of that. The grace period will give you the time to get organized, but if you wanted to start paying back early, I know that sounded kind of silly, right? Who wants to actually start paying back something faster? But if you did want to pay some of the interest only or something during that grace period, at least it'll decrease the overall cost of your loan, because you're not adding on, 6 more months basically to the loan. So that didn't come out right. I would restate that to say there's something called capitalization. So where your grace period kind of gives you a period of time, and that's a wonderful thing. But what happens is your interest is accruing during that time on some of these loans, and your interest is capitalized at the end of the grace period. So let's say let's say you have a 6-month grace period, you get to the end of the 6-month grace period, the interest capitalizes. And what does that mean? That means that if I borrowed $1,000, I'm going to make it an easy one, $1,000, and my interest that accrued on that loan up until the end of that grace period was, I don't know, let's just call it $60. I'm just going to use an easy number here. Now my interest is capitalizing at the end of that 6 months. I'm sitting there and, boom, here I come up to my 6 months. Now my loan is $1,060 that I'm paying interest on. So at the end of my grace period, I'm paying on, not on $1,000 loan, I'm paying on a $1,060 loan. So you're just paying a little bit more extra there. Now, and that's a pretty low number, and you've likely borrowed more than that. So let's say you borrowed $30,000 or $20,000. You could see where the numbers could get a little bigger there. And so anything that you can do during a grace period will only reduce the amount of what you got to do at the capitalization moment, which for federal loans and usually private loans is at the end of your grace period. So hopefully that helped, because if you have the opportunity, try to pay a little bit of the interest and get rid of something there, but it's not required, but it will only help you. Okay, so I kind of said all that. All right, so deferment and forbearance. So deferment is basically a time frame where you're not having to make any student loan payments. This is typical, like if you were to, and this is those of you who are a graduate student or who were there at Wilkes on the graduate level know this. If you had undergraduate loans, you know that when you went to grad school, you could have deferred your loans while you were attending school there, at least have time. That's a typical deferment, is kind of when you go on to grad school, or if you go into the military. The interest is still accruing, but you're able to defer the loan while you're doing those important things. Forbearance is a little bit different. That really means that you are having trouble paying and you're basically asking for no payments to be made during, you're in repayment, but you're asking for them to kind of suspend that for a period of time. And usually it's in a period of time that's in a 3 to 6 month increments, whether this is federal or private here, I'm talking about in terms of the type of loan. So again, if you're having trouble paying, they might offer you a forbearance, which would allow you to kind of get on your feet and figure things out during increments of time that are relatively short in nature, 3 to 6 months. So the interest is accruing on those too, but it does help. Believe me, I mean, you know, things happen. So you might need this somewhere down the line during your repayment. So the common reasons I have on the right, you know, you're going back to school, you're having trouble with your finances, you maybe were unemployed, you're in the military. If you maybe had a emergency disaster, like if you're in a hurricane zone or tornadoes or wildfires, those sorts of things, those are very common reasons. In fact, like at College Ave, we don't, we look at the FEMA zip codes. So when there is a natural disaster, we automatically will help, you know, put students into emergency disaster forbearance for a period of time. Like we automatically offer that. So you might find that as well. And it's, you know, it's unfortunate, but that's, you know, hopefully that'll never happen to you, but those types of things are available for you. And certainly a fellowship or residency or an internship, if you're in a program that is, you know, that's a relevant course of for you. So I do have some sources there at the bottom if you'd like to access some articles on that as well. And then this is just a laundry list of things. I don't need to read through this list arduously, but I may point out a couple things here. So when to contact your lender or servicer. You know, if you happen to, well, first of all, if you want to use auto debit out of your checking or savings account, you probably, like I already recommended that earlier, because it automatically will take your payments and you don't have to think about it and it's done. And it'll be, you know, ready to go every month on time and you won't be late. So if your bank account information changes, though, you would have to, you know, let the lender know what that is. And I'm sure at this stage, most lenders are going to be allowing you to do that online or in the mobile app that they have. So it should be a relatively easy task. If you want to make extra payments, you could, if you have any questions about making extra payments or reducing your payments, if you don't understand any of the billing statements, or if it looks like there's an error, certainly I would contact them at that point. You know, these are pretty, these aren't necessarily rocket science. If you think, you know, if you one day you have a question, you know, you contact them. But certainly it's the things that you might not think of are the changing of your address. And if you're embarrassed, number 7, if you know, don't be embarrassed if you've fallen behind on your payments, just make the contact with them, and they'd rather help you than for you to linger out there to a point where you're going to be in a worse situation. So that's, I keep honing in on that, but that's important. And also sometimes they'll let you change your payment date. So if you have, let's say they assign you, your payment is due on the 15th of the month. Sometimes they'll let you pick a different payment date. Like if your paycheck comes in, but you don't, that timing just never works for you with that date that they picked. Sometimes they'll let you, you know, change your payment date. They'll let you do that maybe once or so. Or I don't know, it depends on the lender, but you might be able to change the date that it's due every month. And certainly if you have any issues in terms of disabilities, please contact them as well. And they'll speak with you and walk you through that as well, in terms of maybe any types of programs that they have that would help you. If you happen to have had a loan, so I put this in here, technically the federal loan repayment, the payment pause ended a long time, like a while ago, the end of the summer of 23. But if you happen to have if you have loans that were alive and kicking at that time, I just feel like this stuff was so much in the news that I just wanted to make sure and say some of this. So there was a payment pause, it ended. But then what has happened is, you know, the interest wasn't accruing on those loans for a long time. And, you know, basically you weren't required to make payments until your grace period ended. Your auto debit, if you were making interest payments and your auto debit was set up, you would have to set it up again now if you wanted to kind of start paying interest payments again. So here's the thing though, there have been so many things happening with the federal loans as of late. Quite honestly, I almost need like a scorecard to keep track of what's happening on a daily basis, because a lot of things have been stalled as it relates to your options as you are graduating and you're going to be repaying loans. So my best advice, well, I'm going to try to give you some of my best advice here as we go into the payment plan. So let me do that. I did put in here, let's see where's my next slide here. 1 second. Yeah, okay, I'm going to talk about the SAVE program next. I did put in a simulator here just in case, so you know, on the studentaid.gov website, which again is the legitimate website for students who are graduating, and maybe maybe you're going back to school, maybe you're graduating and you're done. But there are some calculators on the Department of Education's website, which is the studentaid.gov site. So I just want to make sure you had that link in here. So I went to the studentaid.gov site a little while ago to show you how to find your loan servicers in the repayment section. But the other thing that you'll want to keep track of is what kind of repayment options are available for me, because there's been a lot of stuff changing. So I'm going to go back over there real quick. So if you go to, so again, I'm on studentaid.gov. And if you go to the loan repayment section, which is the same section as I was on before to find your loan servicer, if you go under repayment plans, you will see the current repayment plans, but you're also going to see this yellow box. And usually when you see a yellow box on this site or something, it's alerting you to something. And what this is alerting you to is that there was a court case. Basically, it was a court injunction that happened in February of 2025 that affected some of the repayment plans. So what happened was it kind of put on hold lots of things that are normally available to you. Also, if you know anybody who has loans and you know who they are and they've maybe complained to you, rightfully so, that they haven't been able to, like their loan is stuck in terms of getting loan forgiveness, and if they were in a program that was qualifying for loan forgiveness, there's just been a lot of news about this stuff that's been happening. So my advice to you is to, go to this site at any given time, and you'll see here, like at the top of the main page, you'll always see something that's happening here at the top, in terms of whether or not you can participate in some of the repayment plans. So for example, right now, you may have heard this in the news about a week ago or so, but the yellow part here is that if your loans are, if you're delinquent, basically they were going to start collecting, the government was going to start collecting on defaulted loans. Hopefully no one on this call would have that because you're just now graduating, but I hope you don't have one from, going to school prior. But the second item here is the income-driven repayment plans. There's a few of them, and the applications are available for you to apply for those. And what does that mean? That basically means that it's the repayment plan it's not a standard repayment plan. It's looking at your income to determine how much you would need to pay on a monthly basis, at least for a little while. And it requires like annual proof of income to, kind of set the stage for you in terms of your payments for the subsequent year, and so on down the line. So if you have like a 10-year repayment, the standard is a 10-year repayment. But if you're looking to go into an income-driven repayment plan, that extends your loan further out on the calendar. So it would be more than 10 years, but they're using it to give you a payment to, that's based really more on the amount of income that you have as a percentage of your income in a way. So I'm doing that as a high level to let you know that these things do exist. And you don't have to always be in the standard repayment plan, but there have been some issues and some stalling, and some problems with some of the repayment plans, and in the last, well, couple of months. So the SAVE plan is one of them, and that was like one of the best deals on the planet for students who are graduating. I'm going to put all these lines up here for you. But it was created during the Biden administration, but it's on hold right now, and it quite honestly may or may not return. If it does return, great, then you should look into it, because it honestly is a good deal. In some cases, you may not have to make any monthly payments, if depending on your income and your family size. This is not good for the direct parent loans, and some of the, but it's good for most of the federal loans that you probably have taken on this call. Your subsidized loans, your unsubsidized loans. For graduate students, the Direct Plus loan for Grad Plus. So I would just recommend going to studentaid.gov, keep an eye out for what's happening with the SAVE plan while you're in your grace period. But unfortunately, it is at risk of going away. So at the moment it's on hold because of the court injunction, and it is at risk of going away, but please keep an eye out, because it is, quite honestly, it was the best deal out there when it started in August of 2023, but it just, it came to a screeching halt here in February. These are the other plans. So we've got the standard 10-year repayment, the graduated repayment, the extended repayment. Those are payment plans that essentially will allow you to go anywhere up to like a 25-year type of repayment plan, even 30. So it's basically all those number 2 and 3 are pushing it out further. They're not income based, they're just pushing it out. Well, I shouldn't say that. They're pushing them out to a longer period of time, but you're still paying back the full loan. The income driven repayment plans, there are 3 different types here, plus the SAVE program. The SAVE program is an income type driven repayment plan too, but I've spoken about that on the prior slide. These are like the rest of the options. And some of these have been on hold, but it did say on the front of that website that they're taking applications again. So you can proceed if you would like to, once you get toward, somewhere in your grace period, if you would like to apply for some of these. If your income is, if you want them to kind of use your income to maybe reduce some of your monthly payments, these are, again, I hate to say it, but I put this together, but this could change. So I want you to know that it's best for you to always go to that studentaid.gov website to see what is currently available, because there's just been so much change in the last couple of months. So it's, I'm sorry, I'm doing the best I can here, but it's, there's just a lot going on politically. So, okay, so public student loan forgiveness. This is one that has been available since I think the Obama administration actually. And this has been on and off hold. There have been some delays with it, but if you are looking to go into a field that is in the public service, so it's really like a government or a nonprofit organization, you can apply. You currently, this program exists where there is loan forgiveness after 120 payments. There have been some issues with that this year, but there have been some people who finally got their loans forgiven this year. And I shouldn't say this year, but probably the last, year and a half, maybe, give or take. So keep an eye out for this too, because if you're going into a government or nonprofit organization, this may be something that you can take advantage of later on. At the moment, loan forgiveness under the income driven repayment plan is prohibited. The only one available right now is IBR, which is the income based repayment. And again, I'm sorry that this can change at times, but the IBR is the only one right now where the loan forgiveness is actually available. Now you're on the front end of things. So you're just now starting to repay. So 120 payments is a long time from now, but I just want you to be aware that hopefully there'll be lots of things that are available to you. And today I'm at least giving you what is available at this time. So those are the links there to find the up-to-the-minute updates. In terms, I know we're kind of rounding third here, but in terms of reducing your cost of your loan, try to pay interest during your grace period if you can, like I mentioned earlier. If you sign up for auto debit, that sometimes will give you an interest rate reduction for some of the loan types. So definitely do that if you can, and sign up for auto debit if you can. And if you want to pay a little extra during the month, that will definitely save you money over time. You can pay more than the minimum to reduce that balance, or you can possibly refinance, which let me tell you about refinance real quick. I skipped ahead for a moment here, just in the interest of time. I just want to make sure to say this. So here's the difference. So consolidation is associated with the federal loan program. This basically means you're taking, let's say you borrowed 4 different loans, 4 different federal direct loans while you've been at Wilkes or wherever else. If you want to consolidate them, you can put, basically put all of those together. What will happen is the loan servicer will average your interest rates together of all 4 of those loans, and they'll round up to the nearest 1/8%. And that's the new interest rate that you'll get. So you're like paying all of it back, but at a new interest rate. So you're kind of squishing them all together into one loan, but it is based on the interest rates that you previously had. So you can save money, lower your payment. It pushes out your repayment period. But sometimes it's about the convenience. When it comes to refinancing is really more the word that's used on the private loan side. So this is really what happens is the lender is you can pick whatever loans you want. So if you want to, pay off your, these 2 federal loans and these 3 private loans, okay, great. What happens is the lender is paying off all 5 of those loan holders, and they're giving you a brand new interest rate. So there's no averaging of interest rates that happens there. So that's the difference. That's what refinancing means. And that's sort of the gist. There's a lot of words on this slide, but that's really the gist of what's happening. So Robin, was there a question that came up?
Yeah, we have a quick question. The question is, it's a very good question. Is it advised to reconsolidate student loans to an established bank?
Well, okay, first of all, when you get out of school, here, when you're on the front end here as you're leaving Wilkes, consolidation. So if you're talking about federal loans and consolidating them with an established bank as opposed to the Department of Education, which I think maybe they might be asking, Jenny, if that's the case, here's what you can do. You can shop a little bit and see what the rate's going to be. Because if you were to consolidate, if you're talking about just federal loans, and let's say the rate you were going to get was like rounded up to if you squished them all together and you rounded up to the nearest 1/8%, what's your rate going to be? You could do that math pretty easily by looking at all your loans. If your rate's going to be relatively low, and if you go over to a private loan lender or bank, a private loan lender like a bank or like a College Ave lender, you can see what your interest rate might be by doing like a pre-qualification, and they'll tell you what your interest rate might be if you were to apply for the refinance loan. I would probably compare the 2. That's where I would start. Because if you're talking if it's way off from where you are today, then I don't know if I would consolidate my loans right now. The interest rate environment right now is a little bit high. Like if you were to go buy a car or a house or to get a refinance loan, or a private loan, like some of the rates, depending on your credit, could be low. Like our lowest refinance rate right now is 6.99. But like our highest is 13.99. So if your credit isn't as great, then if you're on the high end of that, maybe it doesn't make sense to do that right now. But keep in mind, Jenny, you could, all of you here, you can do that anytime during the life of your loan. You don't have to do it today. So you can kind of monitor the interest rate environment and see, and maybe if the rates start going down a little bit like they were a couple years ago, then you might be a little bit better off consolidating more at that time, I think.
Yeah, because I think the overall credit is very volatile right now. It's all
Yeah.
over the place. So things might settle down a little bit. So, but I mean, that's entirely up to the student, what they want to do. I mean, they could go out and weigh all their options before you make a decision, or you could stay right where you're at. I mean, you could always look at that, and it could be 6 months down the road, and it could be a totally different story, right?
Yep, for sure. Yeah, I think I'd probably wait it out just a hair, just to see what happens. Cause you know, you've got your grace period too. So you can, you know, you've already got some time built in. So you have at least that. And then maybe you could take a look at it and see where it is in another 6 to 9 months. I'm not a financial advisor. I will preface that by saying, you know, like I'm not a paid financial advisor, but that's just me being in this business for a long time, you know. So now, Robin, I know we're about at time, and I am sorry to have maybe lingered too far on a couple slides there, but are there, you know, I'm happy to finish up here. I know there weren't that many left, but
Does anybody have any particular questions, or I'm gonna let Pat finish her last couple of slides because they are important slides. Everybody will be provided the recording along with the slides, but the last couple slides are interesting and they give you some tips moving forward. Just to keep in mind, even if you're not gonna do them right now, they give you some tips. So Kat, please continue.
okay. Yeah, I'll be quick. And if anyone needs to drop off, I understand. There were just a couple of things. One is I already talked about interest capitalization back here, but paying off debt quickly, there are two different main repayment methods that kind of people, you know, that are heavily, if you were to Google, like, you know, how do I pay off my debt faster? Or how do I save the most money when paying off my debt? These are going to come up because they're sort of common methods. One is called the debt avalanche method, and one is called the debt snowball method. And it just depends on kind of how you feel about you know, your debt. If you have high interest rates, do you want to get rid of that first, or does it give you some sort of peace of mind if you pay off like a $500 credit card, and then the next smallest credit card balance, and then the next smallest credit card balance? So debt avalanche is where you're paying off the highest, like credit cards first, and private loans first, or federal loans first. And then you're moving on to the, you know, you're kind of hurrying to pay those off by paying extra, you know, pushing any extra money towards them, while you're doing kind of more like the regular payment, minimum payments on the lower interest rate ones. And then when you pay that one loan in full, or the credit card in full with the highest interest rate, then you move on to the next one with the second highest interest rate until you're getting rid of your debt, you know, but you're getting rid of it's going to save you the most money if you do that first method, because you're getting rid of those expensive rates first. Whereas the debt snowball method is, I'm just going to pay, like, I like the fact that I can, if I have 3 credit cards and 4 student loans, I just had this one small loan I took out. I'm going to try to put as much as I can towards that and get rid of it faster while I'm doing like my basic regular minimum payments on the other stuff. And that gives some people peace of mind. You know, you pay it, so you're not necessarily saving as much money that way, but sometimes it's just a sense of satisfaction. So that goes with credit cards or any kind of debt you ever have. So those are common methods to pay off your debt. I did those other slides, and then in here I talked about refinancing already, and I think that's okay. But this, so this is just a quick example of how much money you can save by just putting a little extra towards like a student loan payment or your credit cards over time. So these are just examples to show you, like, hey, even if I just pay an extra $10 a month, or in this case, I have a $35 extra, $50 extra a month, or $100 extra. I mean, you know, some of this stuff it just depends on your budget, but even just paying a little bit, I mean, look at how much you can save just by paying an extra $35 a month. So, yeah, so I always think of it as, you know, even if it's 20 bucks, it's maybe one less pizza a month or something that you don't get, or, you know, 4 fewer Starbucks or Dunkin' coffees or something like that. And you might end up saving, you know, more than you think that you can. So over time, it makes a difference. And then lastly are these tips that some of them I've said already, but I will say that creating a budget is sort of vital. And some of those budgeting apps that I put in that earlier slide might help you to figure out, okay, I've got to now afford rent, food, my utilities, if you have streaming services, your student loans, you got a budget in there. Creating a budget now during your grace period will only help you in the long run, because then you'll figure out how much disposable income you have after the fact. And if you don't have disposable income after you've taken all these essentials into consideration of what you have to pay, then you have to adjust somewhere. And so starting in your grace period makes sense because you have time to do it. So definitely use one of those. I think use one of those budgeting apps. It's probably the easiest way to go. And then beware of the scams, because there are a lot of fraudsters out there. They're getting really good at it, actually, which is a whole separate presentation. They're getting quite good at it. And we at College Ave have definitely been, we have been preventing lots of fraud, to be honest, on the student loan side. When you're looking at student loans or credit cards or anything at all related to our personal data, fraudsters want to get money from us, all of us, and they win sometimes. So I definitely think that, you know, if it sounds too good to be true, it could be a scam. So be careful. And then the last thing I'll point out on this slide is building an emergency fund. So I always kind of consider this like, if you have a flat tire, are you going to have the money to pay for your flat tire, to get a tire replaced, and have the money for it, in addition to paying your rent, your food, your utilities, all your stuff, your student loan? Like, so saving up, they say, saving a 6-month emergency fund will help you in, you know, cases where you get a flat tire or you have something that you weren't expecting. So now's a good time for you to build the budget, start building an emergency fund, even if it's a little bit a week, you know, out of your paycheck. Pay yourself first and put it in to a savings account or something, so that at least it's there and ready in case you do have an emergency. And that way you can still keep paying for all the things that you know, you're responsible for. So and that's pretty much it. So if you have any questions, let me know. And I thank Robin for inviting me tonight, and Tony. I don't know if Tony's still on here. But I appreciate it, and I'm happy to stay on here and answer anything else.
Thanks, Kat. I think you did a great job. You know, with everything that's a little bit confusing out there with the government and what's going on, we try to keep it as straight as we can, right?
Very
If you have any
confusing.
questions, now's the time you can unmute yourself and you can ask the question to Kat or myself directly, or you could throw it in the chat, however you want. Kat will provide the recording along with the slides to everyone who has attended. And then I will be posting it out on the website, replacing the one from December that Kat had done first for December grads. So students could get on and get what they need in the future. We did have a lot more students that signed up for this, but they didn't attend. And I'm sorry that they did miss that, because I think that's, I think this is great information for the students, especially with the payments going through.
Yeah, that's okay. But I thank everybody for coming. Hopefully you learned something.
All right, thanks, everyone. I appreciate it.
All right, thank you. Thanks, Robin.
You want to stop the recording?